What's up, traders? Steven here, your honest trading coach, and in today's video I want to share with you what I consider to be one of the most powerful price action and structure trading techniques that you can use in the Forex market. This is a technique that I have used over the past few years to create a ridiculous advantage over markets, and my hope is that by the end of today's video you will have everything you need to create an advantage over the market like that using this technique. So in the beginning of the video, what I'm going to do is go through the past few pro trader reports we have sent out to members, showing you the areas that I pointed out and also showing you the results of those so that you can see that this technique actually works. After that, I'll teach you how to use it in your own trading. And towards the end of the video, I'm going to tell you what I'm looking for in markets going into next week in terms of the zones I'm paying attention to for possible trades. So if that sounds interesting to you and sounds like something you're going to get value from, then go ahead and smash that like button for me. Click the subscribe button down below the video to the right hand side and the notification bell to be notified when we come out with future videos each and every week. Follow us over on Instagram for more content at the trading channel, and I'll see you directly after the intro and disclaimer. Alright guys, welcome back, and for starters, completely forgot I was wearing this until I was editing the intro. It's a bandana. I just got back from the store and had to have a mask on, so let's remove this. And now we can actually get started with the video. So just as a brief overview of what this video is going to be, this video is going to show you how I point out extremely accurate zones to trade from in the market. At the beginning of the video, we're going to go over a few zones I've already pointed out, and I'm going to show you the results of those zones. Did the market move around from them, fall or rise, depending if they were support or resistance? After that, I'm going to teach you how to spot out these zones for yourself, and towards the end of the video, I'm going to give you the exact zones I'm looking at for trading opportunities going into next week on the top 5 major pairs. So let's get started with a clip from a couple of weeks ago where we were talking about the Aussie Canada coming up into this zone here, like we have now, right in here, and falling from this zone. Let's take a look at that clip, and I will be right back. In the case that we don't make it back down to this area, has this red zone been pushed around by the market multiple times? Yes, it has. So with that being the case, this red zone, if we don't come back down into this green zone, or even if we do and we get a push up, this will be my next counter trend zone, and it'll be the zone I'm looking at for possible short trades out of the Aussie Canada. All right, so in that clip, you could see that we were pointing out a zone between 0.9612 and 0.9551, and I was expecting this zone to become resistance. If we look at the chart now and I zoom in for you, you can see that we got within right at, if this will work, 3.5 to 4 pips away from that zone, and the market immediately fell down. And I know on a daily chart, this does not look like much movement, right? This little push down, but remember, well, hopefully you've seen some of the previous videos. In these zones, I don't look for trades on the daily chart. In these zones, I'm looking for trades down on lower time frames, like the 1 hour chart. So on a 1 hour chart, this is a move of somewhere around 110 pips, which is plenty to get targets, plenty enough movement to get targets on a 1 hour chart. So with this specific trading strategy that I'm going to teach you in this video, what we're looking for is a market to get into these major zones that I'm going to show you how to point out. Once we get there, I want to drop down to a lower time frame, for instance, a 1 hour time frame. And what I like to look for on this time frame is price action patterns. So one of the main price action patterns I like to use, you have more than likely heard of before. It is a double top and double bottom. In this specific case, we're at a level of resistance, so it would be a double top. Right here, we have one top, a neckline. This would be considered the second top. After a double top, I want to see confirmation that we're going to go lower. If we get a double top, but we don't have a red candle showing me that there's some selling pressure, then I don't take that trade. But in this case, this little doji right here, if I zoom in, it'll be a lot easier to see. Let's do that. This is a red candle, right? So we have this double top red candle kicker right here at our previous zone. And something else super important to remember is that resistance and support are not lines that you place on the chart. Resistance and support are zones that the market is likely to turn around from. Now, let's go back out to the daily chart and let me explain to you why I considered this zone between 0.9550 and 0.9612 a major level of resistance. If we look left, and if I put market replay on, which I love to do while I am teaching here, so put on market replay. If the market is right here, right now, and I'm looking at this as a live chart, this is an area, by the way, patience pays. So this is an area that I've been pointing out on the Pro Trader Report for at least 3 weeks. Actually, I can go back and show you the latest. This was the 30th of June. And right here you can see the Aussie Canada have a resistance zone of right at the same exact area that we're looking at. I'll zoom in on this so you can see it. Right at this area, I've been pointing this out since the 29th of June for a solid 3 weeks. I've been telling traders this zone is the level I'm looking at for possible short trades. So being patient and actually trading when the market shows you the best possible situation pays off big time. And in this certain situation, what I was looking at is price is currently right here. Okay, well, if price is right here and I'm looking at a level that price could possibly stop at and reverse, because we are in an uptrend. Don't get me wrong, we're in an uptrend. But what I like to do is look for the trend of the market and then look for a counter trend area and a trend continuation area. In this specific case, the market was trending up. I'm looking for a counter trend area. So if the market is right where my black line is, and we're looking left from the market at exactly where it's at right now, what am I looking for? I'm looking for the next major level of resistance, looking left from where current price is, which is my black line. In this case, the next major level of resistance looking up was right here. Why is this a major level of resistance? Well, because it pushed the market around big time. We had a solid drop from this level after the market pushed up to it. So with that being the case, this is the next level I want to look at for possible shorting opportunities. Not to mention, and this is the technique I actually want to teach you, is the fact that this is a level that's been pushed around by this market multiple times in the past. We have 1, 2, support, 3, 4 different times, 5 right here if you count this as resistance. 5 different times this market has been pushed around from this level. So what I expect to happen is that if we get to or around this zone of resistance again on the Aussie Canada, the market will be pushed around from that zone. So with that being the case, obviously this is an area I want to look at for possible short trades. Let's hit play and see what happens here on the Aussie Canada. As soon as we get close to this area, we see this big red candle coming out of this zone, pushing the market down over 100 pips. And again, if I'm going down to an hourly chart to place my actual trades, 100 pips is going to more than hit my potential profits. So that's the Aussie Canada. You saw it in the clip. You saw the Pro Trader Report. This is not hindsight for everyone in the comments, and you're probably not one of them, but about 5% of people think that I'm doing this in hindsight. I'm not. The email that you saw was from the 29th, and the video clip you saw was from 2 weeks ago whenever I did a video about the Aussie Canada. So it's not in hindsight. I was pointing out the zone well before the market got close to it. The next one we're going to take a look at is going to be the euro dollar. First off, let me show you the Pro Trader Report on the euro dollar to show you that I was pointing this zone out before the market got anywhere close to it, and then we'll take a look at the euro dollar right now. So here is last week's Pro Trader Report, as you can see right here, and I'll zoom in on it for you. I was looking at the euro dollar and saying that there was an area of resistance around 1.1496 to 1.1439. So let's go to the euro dollar chart now. I'll get this out of the way and head to the euro dollar. Right here, you can see that I do have a trade on, a live trade here based on a daily chart trade and based on an account, by the way, that I'm going to start trading for YouTube that has about $10,000 in it. I'm going to start trading this. It's a live $10,000 account. I just want to use the strategies that I teach here on YouTube to trade it, and then I'll show you the results of those strategies throughout time as I continue to trade with this account. But here we are in this area that you see. If I'll go ahead and put some horizontal lines on the screen, is exactly the area you just saw on the Pro Trader Report. We have a 1.1440, 1.1497. That's around the same area. And what's happened? Since the market's come to this area, we've seen a major push down of how much? Again, on a daily chart, this does not look like the market has moved down a major amount. But if I'm taking trades off the hourly, then what I can do is say This was an 80 pip move. On an hourly chart, that's gonna hit my targets more than likely. Let's actually drop down to the hourly now. So in this specific case, on the hourly chart, we did not get a price action pattern here. What we have is just the market pushing up into this area and then pushing down, which happens from time to time. There was no entry reason whatsoever. I do, though, have an entry reason out here on the daily chart, which is why you see the position open. But why was I looking at this as a major level of resistance? Something that's even more important than why I'm in this trade right now is the fact that this was a major level of resistance. This technique is so powerful at spotting levels in the market that the market will about 65 to 75% of the time react from. That is so powerful when you're dropping down to smaller time frames, because you put yourself in a position to have an advantage, and an advantage like that is what creates a consistently profitable trader. Is what creates a successful strategy. It's having an advantage over markets. It's that combined with having a correct risk management plan and discipline to stick to that trading plan, which requires a lot of testing and a lot of time. But essentially, if you can't find a way to have an advantage of the market, then discipline and risk management matter absolutely zero. So this is the first step, is to find a way to have an advantage over the market, and that's what these levels do. Now, why was I looking at the euro dollar at the area in red as an area of resistance, major resistance? I'll plot horizontal lines that go all the way for you so you can see that I'm using the same exact technique here as I used on the Aussie Canada, which is 1 test, 2 tests of resistance, 3 tests of resistance. This market has been pushed around by this level so many times in the past that I assume once we get back up to this level, we will see a drop out of it. How much that drop is, I have no idea. I just assume that the market is going to react to this level. And if we're pushing up to it, what I mean by react is we will see a fall from this level. And that's what we've had already by about 80 pips. I'm expecting a little more of a fall, which is why you see me in a live position here on the euro dollar. We're going to take a look at a couple of other pairs that I sent out the Pro Trader report on. I'm going to show you the results of those, and then we're going to dive into how you can actually use this technique yourself in your own trading. So next up, let's go ahead and take a look at the pound New Zealand right here. So the pound New Zealand is a trade that I sent out. It wasn't a trade, it's a zone of support that I sent out. I'm going to show you why I was considering this a major zone of support, and also I'm going to take you down to a lower time frame and show you the entry reason that I use in these zones. So first off, before we do that, let me show you the Pro Trader report where I sent traders this zone, which, by the way, the Pro Trader report comes with the EAP Training Program. If you're interested in advanced training, a little more about the strategy, you want to know a little more about the strategies that I use, and you want to have a personal mentor on your trading journey, then feel free to click the top link in the description for the EAP Training Program. If not, that's totally fine too. No big deal. We're going to take a look now, though, at the Pro Trader report on the pound New Zealand. All right, so this is from the 7th of July. Here on the pound New Zealand, you can see that I have an area marked out right at 1.911, between that and 1.8989. So this level right here is exactly where I was telling traders, look in this level for possible buying opportunities. If we go back to the pound New Zealand itself, you can see that since then, we've had a pretty nice push out of that zone. So first off, why did I look at this area as a possible area of support? Well, zooming out, remember, let's actually use market replay, because I really want you to comprehend this. If the market is currently right here, okay, let's say this, I'll zoom in to make it easier to see. This is exactly where the market is. Well, I'm going to put a horizontal line there, and I'm going to say from where the market is right now, what's my next level of major support for a counter trend play? Well, if the market, let me change this line to blue to make this a lot easier. Sorry about that, guys. Okay, so if the market's at my blue line, then what I'm going to do is look left until I find my next major level of support. Where's that next major level of support? It's right here. This level of support, not only is the major level of support the market is going to hit next if it continues down, but it's also a level that's been tested once, twice, 3 times, recently in the past, 4, 5, 6, plenty of times. This market's been pushed around between this area multiple times in the past, so I expect it to be an area that gets pushed around again, where the market gets pushed around yet again, which is why I was considering trading opportunities to the long side from this area of major support. So as we hit the play button, you can see the market come up, come back down into that area eventually. And since then, we've seen a rise. Now, let's go down to a smaller time frame. Take a look at the actual entries. And remember, I'm looking for price action patterns on the smaller time frames. So on this time frame, and what did I say that I was looking for? Not just price action patterns, in general, double tops and double bottoms with what I call confirmation. Confirmation on a double bottom being a green candle. Confirmation on a double top being a red candle. So let's take a look at what we have here. We have the market pushing down into our level. This is not a double bottom. This is just a period of consolidation. But here we have a bottom. We have a neckline created. We have a double bottom and a green candle. With that being the case, I would have a long position, or actually this was a trade I took. I had a long position coming off of this green candle right here, opening the position. My stop loss went right under my zone, and I had a 1.4 or 1.5, 1.4 to 1 risk reward on this trade. So that's the entry reason, also with the analysis and the powerful technique of looking for these major areas of structure that have been tested multiple times on the daily chart. And how do we do that? We're getting to it, I promise. But before we do, let's take a look at one more trade on the pound Aussie. I'm going to show you the Pro Trader report on the pound Aussie first, and then we'll take a look at how it played out. And after that, I'm going to teach you how to actually use this technique yourself and in your own trading. So let's take a look at that pound Aussie report right now. Okay, so here's the pound Aussie. And as you can see, what I want you to pay attention to is this resistance area right here at this previous level of support right here. So this was an area that after the market fell and closed below, I expected to become resistance. So let's go over to the pound Aussie now. And whenever I say I expected to become resistance, I mean I expected it to be a level that pushed the market down. So at the time of that email, as you just saw, and I'll put a screenshot of it beside the screen, the market was about right here. As the market was right here, I told traders, if we get a pullback into this red zone, I will be expecting the market to push down from that area. And for the most part, I'm expecting it to at least come back down and retest these lows. So let's hit play and see what happens. The market pushes up into that area, pushes back down, retests the lows. So then we have another situation where the market pushes up closer to the top of that area. And since then, we've also seen a fall from this market. Now, again, these moves don't look huge on a daily chart, but if I'm trading based on the hourly chart, then what I'm ending up with is 200 pip moves and 250 to 300 pip moves. I'm ending up with really big moves that on a 1 hour chart make it extremely easy to hit my potential profits. So with that being the case, and you're seeing this in action, and don't get me wrong, this is not a 100% accurate thing. As I mentioned earlier, for me, this provides about a 65 to a 70% accuracy, but that accuracy is including entry reasons and the correct stops and targets that I use with those entry reasons down on lower time frames. This is something I've tested thousands of hours and created and adapted and readapted and optimized over and over to create this advantage. But this is the foundation of that advantage, is major levels of structure on the daily chart, and this is exactly how I point them out. Let's look at this now. So what we're going to have in any trending market is swing lows and swing highs, right? If we're trending up, we have new highs, new higher lows, new higher highs, new higher lows. In this type of market, the most accurate place to try to look for trading opportunities is going to be the previous level of resistance that was broken. This is going to create some serious accuracy when combined with the right entry reason. So this is a part of it. This is a part of one of the most powerful techniques there is to structure trading and price action trading. The next part that I think is just as, or maybe even more powerful, is when this market is doing this and we're trending up with higher lows and higher highs, you will always have a level, my dyslexia is kicking in, back here somewhere that has been tested at least twice. That level, stay with me here, the market is now starting trending up, right? But this level back here, that let's say price action's right here, where we are now. Let me change this color actually. I'm gonna try to make this as easy as possible. Price action is right here. If we look left, what's the next level of major resistance this market is going to run into? It's gonna be right here. And this level if it so happens to be tested more than once, becomes extremely powerful. And it becomes extremely powerful for a situation where you can look for possible short trades out of that area and get a major move, at least down on a lower time frame. Even if it's only 1 to 2 candles on the daily chart, normally that's plenty enough for you to hit targets down on a lower time frame. So this, what I just showed you, is an example of the counter trend technique using this powerful strategy. An example of the trend continuation technique is like what we just talked about. A market trending up, you want to look at that previous level of resistance. You want to look for the market to come down to it, drop down to smaller time frames, and look for possible price action patterns or candlestick patterns in order to take trades from that level. And this, again, is not a make you rich overnight type strategy. This is something that you need to put the work in order to use. Go back and test how many times this has worked out of the last 100 instances that it's happened on charts and see if historically this has provided an edge. Because if it has not provided an advantage or an edge historically, then there's no reason to trade it. Now, I know from my personal experience that the way I trade, this does provide me with an edge. But we see markets differently, I'm sure. There's plenty of things that could go wrong. You need to do your own testing when it comes to this type of strategy. And now that that's the case, let's take a look at a couple of examples on the chart. While doing so, taking a look at these examples, I'm going to show you what I'm looking for going into next week in terms of the zones I'm looking to trade in. And while doing so, it's going to be examples of what you need to be looking for when it comes to these zones, these powerful zones to trade in. So let's go ahead and take a look at that. Now, we're going to do that on the top 5 major pairs, starting with the euro dollar. All right, so on the euro dollar, what we have here is this market has already ran up into the previous level of resistance, right? But what did we talk about earlier? Patience, being prepared. Being patient and prepared, that's 2 of the most important skills for any technical trader, is being patient and being prepared. So if I want to prepare myself, even though I'm already in a trade, for the next possible trade, what do you think I'm going to do? Well, we already have one of these zones pointed. I'm pointing out zones. That's what I'm going to do, is point out the next areas of structure that I'm going to be paying attention to for possible trades. I already have one of them pointed out here in green. This area was the previous, if this market continues to fall, what's the next major level of structure it's going to hit? This is how we prepare ourselves for any situation in the market. If this market falls, like I'm expecting it to, as you can see by my target here on the screen, if we continue to fall here on the euro dollar, then I'm expecting this zone between 1.1259 and 1.1141 to act as support, to act as support. And if I'm expecting that, then what that means is that if the euro dollar gets down to this level in green, this is an area I'll be looking for possible long trades using price action patterns like the double bottom with a green candle at the end of the double bottom to show me confirmation. Now, why am I looking at this area? Again, it's the next level of support that if this market falls, it will hit. Not only that, it's also been tested multiple times in the past. That makes it a very powerful and a major level of support, and that is the reason I'll be looking at this level for possible trades. Now, I like to do both support and resistance because we have just as much of a chance of this market heading higher as we do having it head down to this green area. So if that's the case and I want to stay prepared for this market to do whatever it's going to, what do I need to do? Well, price right now is in this zone, right? We have a black horizontal line at the top of this zone right here. This is the one I'm talking about. So what I need to do is look for the next level of resistance above this zone that the euro dollar will hit. How do I do that? I look left. So let's look left and see where the next level of resistance is. Well, it's right here, but this is so close to the level we're already in that I'm going to consider this level the same level that we're already in. With that being the case, this is my next level of possible resistance right here. Now, was this tested multiple times? This would be 1. This is 2. There we have it. This is a level that was tested multiple times by this market in the past, and it's the next level of resistance this market is going to come to. For that reason, this is the preparation part of it that I was telling you guys about. For this reason, I am going to be looking if we get a breakout to the high side on the euro dollar, which is not what I expect at the moment, but could absolutely happen because it's trading. just because I expect it to go down does not mean it's going to go down at all. And that's something that's really hard for a lot of beginners to understand. And something I need you to know is that there's no way to be 100% accurate. There's going to be times that you are wrong. So if I'm wrong and this market continues higher, I want to be prepared for that. And the way I'm being prepared is by looking at the next major level of resistance, which is between 1.1624 and 1.1576. If the euro dollar gets up to that level, then that's a level I'll be looking at for possible shorting opportunities going into next week. So with that being the case, let's go ahead and move on now. This video is getting quite long. I can tell it's already probably a little over 20 minutes. So let's go ahead and speed this process up. The pound dollar, first off, the first thing we need to ask ourselves is what trend is the market in? And then we can look for major levels of structure to be counter trend levels or to be trend continuation levels. In this specific area right now, the pound dollar is not in a trend. We're in a period of consolidation between this area and this area. So with the market consolidating like it is, what do you think I'm going to be looking for? If you said nothing, you were absolutely correct. If there's a market that you are confused about, sit on your hands and do not trade that market. It's totally fine to not trade. That's better than forcing something. So if you see a market that isn't doing something you understand, that's consolidating and you can't tell very plainly that it's in the correct trend you want to see it in, skip it. Move on. Look at all the pairs on the right side of my screen. There's plenty of currency pairs. We don't have to trade the pound dollar. So for that reason, I do this anyway. I prepare for situations way in advance. So for me, the next level of resistance is going to be right here. And the next level of support I'm paying attention to is actually this major level right here. And let me explain why. With the market where it's at, we've already seen this market fall from this level of support. So I'm not expecting this market to get here and then just take a huge dive anymore. We've already seen the market fall from this level. And now we're pushing up, possibly creating higher highs and continuing a trend up. If we do that, then the area between 1.3118 and 1.3205 is going to be an area of resistance that I look at for possible shorting trades. If this market does continue to fall, then this area in blue between 1.1967 and 1.2092 is an area of support that has been tested multiple times. And for that reason, it is an area that I'll be looking at for possible long trades if the market gets down to it. So that's what I'm looking at on the pound dollar. Again, that's really far away. Right now we're in consolidation. I'm not really looking to trade this pair, at least not with this specific technique. So let's move on now to the Aussie dollar. On the Aussie dollar, we have an area of resistance right here. This is actually a really similar chart to the euro dollar. This is our area of resistance that we're currently testing. So what I want to do, if we're already currently testing this area, is look left above this area and prepare myself for the next possible level of resistance, which I see as right here. And let me tell you why. If we were looking left from our blue line, what's the next level of resistance we're going to hit? Right here. That's 1. Has it been tested multiple times? Yes, it has. So that makes it my next counter trend level. Do I have a trend continuation level yet? No, I do not. Let's go ahead and slow down a bit for the trend continuation part of this. If this market does come up to this level, that means we have broken our previous level of resistance, and this will be an area I look at for long opportunities if we fall to that area. So this is a big if, but if the market breaks and closes above this previous resistance level, then this will be a level that I look at for possible support. That level is between around 0.7063 and 0.7001. Again, that's only if we get a break and close above it and a pullback into it. Now, for resistance, if the market heads up higher, then I'm looking at 0.7209 between that and 0.7174 for possible short trades. If we make it into that area, I'll be looking for a double top with a red candle on the end of that double top for confirmation. Now, we're going through our last two pairs. If you're still with me, thank you very much. Might as well click that like button because obviously you've enjoyed it because this is a 28-minute video at this point. So it's been awesome, I would imagine. Let's go ahead and jump into the dollar yen. Very similar, right, to the pound dollar right here. Are we in a plainly noticeable trend right now here on the dollar yen? I wouldn't say so. I can't see a plain trend here. So what am I going to do? I'm going to sit on my hands. So with this video being as long as it is, instead of pointing out levels that I'm paying attention to that might not be hit for the next month, I'm just going to say, sit on your hands pair. I don't have anything to trade using this method on the dollar yen. Let's move on to the dollar Swiss, in which we have a couple of levels here, right? Okay, so before I do this, why don't you see if you can spot the levels you think I'd be paying attention to for possible trades, the major levels of support and resistance on this pair. Pause the video if you have to. I'm going to go ahead. So if you've got it already, hopefully you pointed out this area right up here as my possible resistance, and this area right here as my possible support. Now, why is this area my possible resistance? Well, that's because this is an area that if the market pushes up, it's going to be the next level of support that was just broken and pulled back to, right? And if that's the case, then the only other question I have to ask myself is, was it tested multiple times? That answer is yes. So with that being the case, if the market, the dollar Swiss, makes it to 0.9624, between that and 0.9587, that will be an area I look at for possible shorting opportunities out of this pair. And if this market continues down instead of pushing up to that level, then I will be looking for possible long trades out of the area between 0.9251 and 0.9181. Reason being, this is what I consider a standalone level. It's a level that has pushed the market around dramatically, and it may be a level that has been tested multiple times. And just so happens that it's a level that's been tested multiple times as support. So those are the areas I'm looking for in the upcoming weeks for possible trading opportunities. If you made it through the entire video and you're ready for some more advanced training, I do send Pro Trader Report, which is all the areas I'm paying attention to for the week on all of the different currency pairs. Comes out every single Monday for every EAP Training Program member. I'll post some testimonials and comments of the latest graduates of the EAP Training Program on the screen. In this program, you'll receive a full training course teaching you the exact strategies that I use on a daily basis in the Forex market. You'll also receive 3 to 5 email alerts showing you entries, stops, and targets on trades that I'm placing based on the strategies you're learning in the full training course included in the EAP training program. And also, beyond that, you will receive what I call priority email, which means anytime you have questions about the course or Forex trading in general, if you're having a problem becoming consistently profitable, you can email the priority support email, and that email comes directly to me, and the response is directly from me, and I'll be helping you in every way possible reach your goals of becoming consistently profitable as a trader. So if that sounds interesting to you, then that is the top link in the description labeled EAP Training Program. If not, that is totally fine too. Make sure you keep it locked here on our YouTube channel by clicking the subscribe button down below the video to the right hand side. Go ahead and click that like button for me if you got value out of this. There'll be a video somewhere beside my face that I think you will find very valuable, and I will talk to you in the next one. See you soon.